Hey traders, John Hal here. We're going to be looking at just a bit of an update on the cost of the actual stock market. I'll be looking at gold and silver as well too. Looking at oil. I'll also be looking at the interest rates and also be looking at fear and greed index and possibly also Bitcoin today as well too. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so the big thing that I really want to start off with today's video is that to say this one thing here. Right now is not the time to be, just guessing. Let me just guess here, okay? Let me just guess. If you really want to do well out of trading, the big thing about trading is it's all about having some sort of approach, right? Or some sort of a system in mind. If you're not doing well right now, I can tell because it's for one reason. Is that because you're not following a system, a set of rules, and you're doing it because you just think it's a good idea. Here's the hard reality of what most people don't understand about these markets. Me, Ray Dalio, any of these people out there don't know exactly what's going to happen tomorrow, right? Or how the market's going to react tomorrow, or how everything's going. Like we don't know. Right, for sure. So the best way to actually get ahead in the markets is to trade some sort of a system that's going to give you probability. Because a lot of the times when we think something is going to happen, instead of looking at the market and say, okay, what's going on, then that's the best thing to do. It's always about the market. So let's have a look at the actual markets itself. And by the way, guys, when I talk about it's all about the market, it's all about reading the charts as well too. And when you start to read the market and read the charts, you can get a much better understanding of how the market's operating and what's going on right now. And so therefore, guys, the best thing to do is just to keep looking out and reading the market. So we can see right now, looking at the Nasdaq is still right at this level of support level through here. This strong level of support. We're still at this level here. We're very overextended on the downside. As you can see, we did have like that head and shoulder formation. So we're very overextended on the downside. We've been going down. So we're probably going to get some sort of a fast and sharp snapback, okay? Not an end of trend, because we are still in a massive downward trend here, like down, and then we ran up, and then now we've actually head back down. So we could get something like that for a few weeks, but it's going to be really interesting to see what actually happens here, okay? So the market is still overall trending down, but we're right at that level of support. And one of the big things that I've been saying is we're at the level of support, but what we need first, I'm not saying the market's going to go up tomorrow, okay? Bumblebees. It's like, is what I'm looking for is I'm looking for like a bit of a bottom right now at these markets. So I'm looking for a potential double bottom. So if we have level through here, right, we have something like that, that's going to give us some sort of a bottom. And then, yeah, we're probably going to get a bit of a rally back up, right? So we have an overall move down, overall move up, overall move down, overall move up, and then maybe back down again. I don't know, right? So we can see that's what's going on through there. But we are definitely holding at that level of support on the Nasdaq there. Looking at the S&P 500, we can see again just pretty much really holding strong of where we're at right now. A bit of a double bottom right now, but we're still holding really strong at these levels of this major level of significant resistance going back of all this time. And guys, this is just reading charts, okay? And the worst time to trade is when the market's been moving in a direction for a while. So a lot of people right now are looking at the S&P 500, and if I squeeze my charts up, they're like, oh my goodness, this thing is going to crash. This is going to crash. And it's been going down. And guess what's happening now? A lot of people are starting to buy a lot of put options here. That's the wrong thing to do, okay? You'd never want to do that. Why? Because look back through history, okay? Put the odds on your side of doing really well. Look back through history. What ends up happening? We end up going through when we never get to a point where we get a pullback, and then we get a pullback, right? So there's inevitably we're getting towards the end of this downward leg before we see some sort of a pullback or even a sharp rally, right? So that's what we're looking at through there. So you never want to be getting into that sort of stuff there. And so traders, the best thing to do is when we're looking at these markets, is to continue reading what the market is telling us, because it's not about what we think here. Let's go look at the Dow Jones. And the same thing for the Dow Jones. The Dow Jones had rallied up, a bit of a double top formation, and then now we've actually rallied back down. But we definitely do have some sort of a trend line coming down, say through here, as you can see. So somewhere through there, that's actually what's going on with the Dow Jones right now. We're holding a level of support through there, and so I wouldn't be too surprised to see a bit of a sharp and fast snapback through here in the markets. And the big thing that I'm seeing right now is that I'm seeing that, look, if we look at the fear and greed index, okay, the fear and greed index is still pegging at this extreme fear. So what does that mean? The market's been going down a lot. So one, we're due for a rally, a pullback, right? And secondly, obviously the fear is still over here. So what's likely to happen is this. If we go to the indices, what's likely to happen is we're likely to get this snapback, right? We're likely to get a rally, probably up here through here somewhere. We're likely to get that because the fear and greed index is over there. Well, what's going to happen to the fear and greed index? This thing's going to come back what? Probably back to neutral, maybe even back to greed. That's obviously how it works when it comes to these short-term swings in the markets. Makes sense? Now, traders, if you do want to learn more about chart reading techniques and trading techniques that's going to really help you, I've put together a bundle, what I call a chart reading bundle, for $4 only. I'm running that as a bit of a sale to help you out. In fact, I've actually put a technique in there that's actually so powerful that it's been working since the 1950s. In the actual course, I actually go back to the 1950s and show you that it's still working. It was working back then, and it's still working today. So if you want help reading the markets and you want to learn how to read the charts, and so you can get a bit more understanding about the stuff that I'm talking about here, then just go to johnsflashstyle.com. Just for $4, guys. I've put together sort of like my top four sort of chart reading techniques in there and trading techniques to use. And also I've actually put a really powerful short-term trading system in there. Plus also you get access to a live training that I'm going to be doing as well too. So a whole bunch of down home country goodnesses in that there. But I'm running that sale today, guys. So go to John's Flash Sale, or that very first link in the description. Go click on that. So that's what we're seeing through there on the markets. If we have a look at the VIX, the big thing that I've been looking at when it comes to the VIX formation is that I've been really focusing on how like this level all through here. And I've been saying that this leg, I believe that this whole downward phase in the market is probably going to be met by some sort of a capitulation to end the bear market, okay? This is a bear market. Down, up, okay? That's a bear market. We've been going down, so we still can rally up and then come back down and then get the capitulation. Makes sense? Just because we rally up through here, that the market hasn't changed yet. We're still in a downward phase. And so we can get a bounce, we can get a rally, and the sellers still be in control, okay? You're just looking at the trend analysis through there when we're looking at that. So you can see that that's what's going through there. So I am expecting to see some sort of a spike in the VIX to sort of wash out these sort of weekends, but maybe we're not going to get that. Let's go have a look at gold, and we can see that gold is continuing to have a bit of a rally out of the markets through here. We can see, but right now gold is going to have a lot of problems at this level through. So I'd have to say, yeah, where it is right now, or even just above it, that there, and even just where it is right now, we've got a lot of problems. So we really need to see some sort of strength coming out of gold. Otherwise, they're probably going to knock it down again when it comes to gold. But again, we really need to see some sort of buying strength coming out of here. And this is the same for silver as well too. We're getting a rally here in silver, and it's not really strong at all. We're getting very, very, very weak. And what I was saying yesterday is that if this rally, if we start to look at the short-term time frame chart, such as the 4-hour chart, and this is something that I was talking with my private clients yesterday as well too. The really, really important thing here is this: is that when we're looking at this level here, look how weak, like that we've had. If you see how strong that leg up is. See how strong that is. Well, if I draw from the start, if I draw the angle, right? Let's actually look at this here. So if I draw a move, let's actually draw a trend line here for a minute. So if I draw it from the start of the move to the end of the move, look how strong that is, right? Or even through there. Right, that was the start of the move. That was the end of the move. Makes sense? So if we have a look at where we are right now, if this is the start of the move and this is the end of the move where we are right now, right, we can see that actually that was the move there. And then guess what happened? We started to do what? We went up strong, but now look what's happening here. If I just draw sort of an overall move here. So you can see here, we went up strong and that was a strong move up through there, okay? So let me take everything off the screen here for a minute. But notice what's happening here right now. Notice that we're moving up through here, and then now we're just going what? Now we're just going, see how we're just going really like, it's like a flag formation. And I was saying yesterday in yesterday's video that the important thing about silver right now is that we're in this like sort of slow move up, and that's actually quite dangerous. Not dangerous. That's actually the wrong word to say. This is actually potentially quite weak, because if we start to get a breakdown like that out of silver, then this is just another continuation of a lower high and another significant lower high before we start to do something like this, and then we continue down, probably back down towards the lows through there. Okay, just trading with the trend. So that's the big thing that what I'm seeing there when it comes to silver. Let's go have a look at the GDX. Bit of an update on the GDX as well too, and we can see the GDX, same sort of thing, a strong rally. Now, guys, for you guys that follow the metals, I'm with you. I am with you, because this thing surprised the hell out of me. I wasn't expecting to see such a big move on the downside. I was hoping for this level be here to be a higher low, and then we could see the meat and potatoes of it. But the market just doesn't do it. The market just doesn't do what we wanted to do, and so therefore continue down. And we didn't actually start an upward trend. We've got a strong move up, and then we've got a strong move down. It's like a V-top formation out of the markets through there. And let's actually just quickly finish off with the interest rates. Big key for the interest rates, guys, is I've been talking about this for quite some time now, that the interest rates are really starting to move on the downside. So we're starting to get that pullback with the interest rates that I've been mentioning for the last few weeks now. And we're still, in the 10 years actually dropping. You can see that we had a really nice drop down. We went from 3.2, now we're back down to the 2.7 on the 10 year. Same thing for the 30 year as well too. We're starting to get a bit of a pullback down to the below 3 now. We were getting up there around 3.3, and then also the you can see the 2 year is actually starting to drop out as well too. So what I've been seeing right now, what I've been saying for the last few weeks, is actually happening when it comes to the interest rates. We are definitely starting to really start to pull back through here. I expect more downside to come overall in the interest rates, and I also expect the inflation start to inflect as well too, because we are going to see an inflection point with that, just like with the interest rates, and just like with everything, we're starting to see this overall pullback, and so I do expect to see this overall pullback come back down towards the bottom, down through here. So I hope this helps you out today, guys. Remember that if you do need help, grab that $4 sort of bundle that I'm putting together right now. You can see all the details on that, or just go to johnsflashsale.com, and I'll speak to you in the next video.